Welcome back to another week of Stocks in Review for the upcoming week. I figured for the last full month of summer, I'd make it a little fun and add some lighter topics to the standard items covered. This week, we're going to take a quick look at what sectors some well-known celebrities invest in and how well those investments are doing. I'm also including alternatives for publicly traded companies, since most of what they invest in are private firms. This might even make you think in a different way from what you're used to doing when you approach investing. First, let's look at newsworthy items that might affect your investing strategies. This week was another great week for earnings. Tesla topped analyst estimates with a much lower loss than expected. Apple had a stellar quarter. They reported earnings per share of $1.67 versus $1.57, with revenue exceeding analyst expectations by $500 million. Nearly 51 million iPhones were sold in the last quarter. And finally this week, the Dow hit a record close of 22,000 for the first time ever. This represents an 11% rise for the year. 72% of the companies that make up the S&P 500 have beaten Wall Street expectations. Usually that number's only 64%, so things are looking good. In cryptocurrency news, it appears that the world did not end on August 1st. Less than a couple of days after splitting from the main Bitcoin network, Bitcoin Cash, abbreviated BCC, was ranked the number 3 most valuable crypto coin. That gives it a market cap of $7.7 billion, pushing Ripple down to 4th place. Ethereum is still a strong second. There's not a lot of strong support for this new Bitcoin Cash from the major exchanges like Coinbase and BitMEX. Bitcoin Cash was literally just created because of the ongoing issues regarding disagreements related to the scaling of Bitcoin blockchain transaction details. Saying that it's volatile is an understatement. Throughout the week, I've been mostly ahead on my Ethereum position. I'm looking to add as soon as it gets close to $200 again. As of early Thursday, the new Bitcoin Cash was worth nearly $500. Eventually, you'll see this stabilize, but in the meantime, if you're a real gambler, there's some crazy money that you can make if you've got the stomach for it using this new Bitcoin Cash. Good luck with all of that. Just 2 stocks for the week. The first is Apple, ticker symbol AAPL. On Tuesday, after the bell, they released third quarter earnings and more than beat expectations. Shares rose over 5%, approaching the $160 mark. Even though I expect some profit taking, I think that you're going to see an increase in the coming week, and of course, now through the fall, as long as the iPhone 8 comes out without any glitches, probably $200 within a year. The charts show bullish trends, and Bank of America reiterated an outperform rating with a price target of $180. Currently, there are 38 buy ratings and 1 strong buy rating. 10 analysts rate Apple a hold. For what it's worth, history shows that the majority of the time, investors can expect a more than 2% upside the week following earnings. I conclude with Shopify, ticker symbol SHOP. This Ottawa company provides a cloud-based multi-channel commerce platform for small and medium-sized businesses internationally. They provide web and mobile storefronts, and they help a lot of small businesses to manage products and inventory. The stock has recently been trading at or near its 52-week highs and only recently pulled back some. Over the last 12 months, its stock price has grown steadily. Bullish trends have beat out bearish indicators at a rate of more than 3 to 1. I like how diversified this company is, and with our growing economy, believe it's a good place whether for a short-term trade or even if you held it through the end of the year. Investments that celebrities make in public companies aren't necessarily the easiest bits of information to come across with a quick Google search. You could say it's quite a tangled web that they weave. While not intentional, I'm sure, nevertheless, let's look at Beyonce, for example. She invested in a company called Sidestep that was bought out by a company called Kayak, who was then bought out by Priceline. As of the first of the year, Priceline stock was at just under $1,500 a share, and now is well over $2,000 a share. If you really want to get sick to your stomach, think about this. The stock was worth only $663 a share back in November of 2012 when the deal went down. She also has a stake in her husband Jay-Z's streaming music service called Tidal, which Sprint paid $200 million for in order to secure a one-third interest in. The Wall Street Journal reported that Apple was in talks to possibly buy Tidal last year, but no update on that yet. She's definitely crying all the way to the bank. Ashton Kutcher is not only a well-known actor and ex-husband of Demi Moore, but he's rated as one of the top celebrity investors in Hollywood. In 2011, he co-created a venture capital fund called A-Grade Investments. Some of the tech companies that he's invested in through this include Spotify, Airbnb, Foursquare, Fab, Uber, and more. At best, Spotify won't go public until late 2017 or 2018 because of licensing issues with Universal, Warner, and Sony, who control the majority of recorded music. Airbnb is expected to go public at about the same time frame according to published reports. While none of these companies are publicly traded right now, it's pretty apparent that the younger Hollywood elite like to invest in the technology sector. If you wanted to compare some of his investments to publicly traded firms, you might look at Expedia, ticker symbol EXPE. It's now trading in the low 150s, but just 5 years ago you could pick up one share of it for less than $60. Yelp, ticker symbol YELP, is another stock that you could invest in now, which was the most comparable stock to Foursquare that I could find that Hollywood's A-list actors and singers seem to have invested in. This week, you would pay a little over $32 a share. 5 years ago, it was trading for just $22. Not exactly an earth-shattering difference compared to Expedia's growth. Justin Bieber has been plowing millions of dollars into private startups such as Stamped, an app that organizes the sharing of web content around one or more themes or topics. He also has an investment in Spotify and a company that does social gaming that supports various improvement projects called Sojo, which recently became Causely. The most similar public company that I could find, again, would be Yelp. Causely works with a variety of firms including restaurants, gyms, and many small businesses. Two big names that they work with that you've probably heard of before is Curves and Gold's Gym. He also invested in another social media app called Tiny Chat, which was bought out by Paltalk, again private companies. The most similar public firms that issue stock would be Snapchat and Meet Me. Things haven't looked too great with Snapchat, ticker symbol SNAP. This week, shares were trading in the low $12.50 range versus $27 back in March. Not a stock that I'd recommend short or long term. With Meet Me, ticker symbol MEET, it was trading this week in the low $5 range versus $2.85 a share 5 years ago. While most of us aren't part of the Hollywood elite, I think it's safe to say that if you invested in Amazon, Google, Facebook, or even Apple 5 years ago, you would realize returns from as little as 90% going all the way up to 700% at Facebook. Thanks for watching, and please don't forget that investing in the stock market carries risk. Never invest more than you can afford to lose or not have access to for an extended period of time. If you enjoy our weekly videos, please be so kind and click like and then subscribe. Have a great week.